So as part of the Democrats' effort to rally the support to pass the Inflation Reduction Act, Democrats had to give in on some demands from Kyrsten Sinema, the problem child senator from Arizona. In particular, these demands involved certain taxes, namely the carried interest tax loophole and certain other taxes that would specifically apply to private equity. And that kind of leads to the question of just what is private equity and why does Kyrsten Sinema care about them so much? Let's talk about it in today's video. Hi, I'm Mike Greiner. I'm a lifelong Democratic activist who's concerned about the direction our country is taking. I'm also a lawyer and an academic, and I'm here to help you stand up to the BS of the MAGA crowd. So to those of you who've been watching my channel for a while, you know well that I'm no fan of Kyrsten Sinema's. In fact, I viewed her as a problem child, even more so in some respects than Joe Manchin, who is a pretty big problem. Part of the issue with Sinema is she actually represents a swing state, a state that was won by Joe Biden. Imagine that. And where I'd say the odds are the Democrats are going to win the Senate seat in the next election as well. Manchin, on the other hand, is a whole other animal. He represents a state that was won by, wait for this, 39 points by Donald Trump. To give you a sense of perspective on this, Donald Trump won the state, earning 10 points more than double what Joe Biden got. This is not a state that's winnable for Democrats right now. It's kind of ironic, by the way, because as recently as 1988, Mike Dukakis actually won the state while he was going on to be defeated nationwide by George H.W. Bush. But West Virginia is an example of where increasingly the white working class that had really made up much of the base for the Democrats, going back to Franklin Delano Roosevelt, have pretty much moved over to the Republican side. Can they be brought back? Well, that's a story for another day. But the point is that Joe Manchin represents a state where, frankly, nobody other than Joe Manchin could win that seat for the Democrats. Kyrsten Sinema, on the other hand, any number of people could win that seat, making her, in my view, much more egregious. What's more is that the other senator from Arizona, Mark Kelly, while he does have the advantage of being an American hero as an astronaut and the husband of Gabby Giffords, who was shot in the head while she was trying to serve her constituents, he's generally speaking been pretty on board with most of the Democrats' plans, making Kyrsten Sinema's intransigence stand out even more. Now, I'd say the odds of Sinema being reelected at this point are minimal. And in fact, she is perhaps the most unpopular senator with her own party in the entire country. Ironically, at this point, she's more popular with Republicans than she is with Democrats in her home state. Something that, while I'm sure she thinks it's going to help her, it's not going to help her because of the fact that ultimately, even though the Republicans may like her, they'll still vote for the Republican in a race in Arizona. So the odds of her making it out of a Democratic primary at this point are slim to none. Be that as it may, we have to give her credit for the fact that she did ultimately support this legislation. And truth be told, I'm still happy that she's in the Senate because it'd be much better than having a Republican there. I mean, let's face it, if there were a Republican there, we would not even have gotten Joe Biden's cabinet appointed. Mitch McConnell made that clear. And there is certain other legislation, for example, the infrastructure bill or the gun bill, that probably wouldn't have happened without her being there. So much as I hope she loses in the next election, right now, I'm happy she's there, given the alternative. That being said, I find her puzzling, I must admit. Ironically, she at one point had been considered a green leftist who ran for state representative as an independent, coming in last place because she was far too liberal. She's also the only member of the Senate who's not heterosexual. So it makes you wonder just what her deal is. What's driving her to behave the way she does? Certainly in Manchin's case, it's a pretty savvy political strategy where he's been able to kind of paint himself as the guy standing opposite the Democratic establishment, which helps him in West Virginia. But that strategy, as I pointed out earlier, is not going to do much for Kyrsten Sinema in Arizona. And what's more is Joe Manchin has actually shown himself to be quite open to a number of populist issues. Things like, for example, raising taxes on the rich. Something which Kyrsten Sinema repeatedly balks at, including with this legislation. Now, the specific piece of this legislation that Kyrsten Sinema objected to is what's called the carried interest loophole. And what carried interest has to do is the difference between how we tax wages versus how we tax property. And generally speaking, the way that we've handled in the United States, for better or for worse, is we tax wages at a much higher level than we tax property, namely interest. So for example, say you buy a stock. You may earn interest on that stock or a bond over time, but you don't actually pay any interest, scratch that. but you don't pay any taxes on that appreciation in value until you go ahead and sell it. Then it's called a capital gain. And interestingly enough, capital gains are taxed at a lower percentage than other forms of income. Now, this is especially relevant to the industry of hedge funds. So let's talk about what exactly a hedge fund is. And hedge funds are an industry that emerged because of a problem. And what the problem is that for people who want to invest in the stock market starting in the 1940s, we have serious regulation there. Specifically, the Securities and Exchange Commission ensures that just about anything that happens within the stock market is made public to everybody. Now, you would say that's not a problem, which it certainly isn't for me. But for someone who's a billionaire or a very, very wealthy individual who doesn't want to disclose how they're investing their funds or even what funds they have, that constitutes a problem, and that's the problem that hedge fund managers have stepped in to address. In particular, there's an exception baked into the Securities and Exchange regulatory regime, which states that you don't need to kind of jump through all the regulatory hoops if you're considered a sophisticated investor. And what's more is if you don't have a whole lot of investors. One of the things I have to explain to my students a lot is that being a public corporation has nothing to do with whether you're listed on a public exchange or not. What defines a company as being a public corporation is how many investors it's got. So if they have a small number of investors, and these investors happen to be sophisticated investors, as defined by the Securities and Exchange Commission, then they don't need to follow all the public disclosure rules that govern everybody else who's involved in the investment arena. Now, as it turns out, this is not a small business at this point. As of last check, the size of the hedge fund industry is, about $111 billion with a B. And it's been growing at a rate of about 8% a year, so substantially faster than the rest of the economy. But that's reflective of the fact that so much of our wealth is being consolidated among the very, very wealthy in our country. And this is just one more way that they're able to do that. In fact, it's worth noting that the idea of what a hedge fund is, the term hedge, is that this is supposed to be a special investment that protects you from the vagaries that you'd be dealing with in the open market. So you invest in it as a hedge against what's going on in the rest of the market. Now, the way hedge fund managers make their money is that they will go to these very, very wealthy individuals and argue that they should invest in them to engage in some very high-risk transactions. These transactions tend to be of the type that people would characterize as corporate raiders, where the hedge fund will go in, buy a company that's not doing well, and basically break it apart, sell off its pieces, fire everybody, and basically suck all the money out of it, whatever's left. That doesn't do a lot for the jobs market or for the American economy, but boy, it sure makes a lot of money for the very wealthy who've invested in this hedge fund. Now, in return for providing this service, the hedge fund managers will charge an annual fee, typically a percentage, maybe 1% to 2% of what's invested in the fund, plus they'll get what's called a carried interest fee, which is something like 10 to 20% of the capital gain for that year, the increase in the investment. Now, why this matters is because, unlike with other investment, there's never going to be an overall capital gain tax that is paid by the hedge fund manager, because they're not seeking to own these stocks over a long period of time. They want to destroy them, take whatever value they can out of it, and move on. And so the idea was that this interest, which every year kind of gets carried over, and as a result, because of the fact that it's not income as we define it in our tax code, it's essentially untaxed. The idea was that we should tax that, because basically it's a benefit that really only goes to billionaire hedge fund managers. What's more is Sinema actually objected to a piece of the corporate minimum tax that was included in this piece of legislation. See, what this legislation also included was a provision that corporations earning over $1 billion in profit needed to pay at least 15% minimum tax. Well, as it turns out, Sinema basically baked a exception into that legislation that's specifically aimed at protecting, guess who? Hedge fund managers. Pretty much nobody else. Now, given the fact that Senator Manchin insisted, and I think correctly, that this legislation should be fully paid for, the Democrats came up with a different tax to kind of fill the gap that was left with Sinema's objections. And that tax is basically a 1% tax on any corporate stock buybacks. Now, let me be clear about this. I think this is actually a better tax. I think this is a better policy. Much as I think that hedge fund managers suck and they should pay more in taxes. This process through which businesses go and essentially buy back their own stock rather than investing either in their business or their people to increase the value of their stock is really an outrage. And it's been nothing short of a shift from the working class in America to the top 1%, or really the top 0.1%. And so the fact that these are untaxed is really an outrage. And perhaps this tax may, in addition to generating some revenue, also provide a little bit of a disincentive for this activity, which really not all that long ago was deemed illegal by the Securities and Exchange Commission. It was only in the 1980s that they changed that policy. And then, of course, businesses have gone through this process of buying back their own stock rather than investing in their people and their capital. But it does kind of make you raise an eyebrow that Kyrsten Sinema would go to such trouble to protect this small group of incredibly wealthy individuals who, frankly, don't contribute much to the bottom line of our country. I mean, they don't really help our economy much. They don't help people get jobs. They don't create value. If anything, they destroy value. But they're rich. And apparently, Kyrsten Sinema likes that. I mean, all I can do is speculate here. And my best guess is that Kyrsten Sinema wants to get a job in private equity, knowing the fact that she's unlikely to get reelected to the Senate. It could be that some promises have been made there, and so she's made it her personal mission to protect this group. And protect them, she has. So much as I'm really quite happy with the final Inflation Reduction Act that was passed, I must say I'm both puzzled and really kind of outraged by the behavior of Kyrsten Sinema, because it seems very counter to the interests of just about everybody in her district and in the country to stand up for the interests of this small group of people, as opposed to standing up for the interests of everybody else. Well, if you want to check out a video I made a while ago about how Kyrsten Sinema is unlikely to be reelected, check out this one over here. I'll see you then. In the meantime, let's hope for continued progress. Thank you.